My name's Naomi, and I am a social media reporter for Bloomberg News. In this role, I spend a lot of time thinking about how companies innovate and then build off of that success. And that's what we're going to talk about today. We're going to talk about what does it mean to invest in innovation. We've heard a lot today from multiple investors about their strategies, the markets, and the rates. But let's talk about kind of how those invested dollars are actually being put to work at companies like Illumina. I'm excited that we are joined today by Alex Aravanis. He is Chief Technology Officer at Illumina. And we also have Nick Kalivas. He is Head of Factor and Core Equity Product Strategy at Invesco. And Invesco is a sponsor of today's event. So, Nick, I actually want to start with you. What does it mean to invest in innovation? Help unpack how you see that issue.
Okay, sure. Let's try to unpack that a bit. When we think about innovation, we think about being an agent of innovation through the QQQ ETF. And what that really means is that the companies that are present in that NASDAQ 100 ET-based ETF spend a high proportion of their sales, their resources, on research and development. And that research and development spend leads to patents, leads to disruptive technologies, leads to doing business in new and unique ways. And so investors who are taking part in this kind of R&D spend through their investment in these companies are really able to grab stronger, more durable growth opportunities. And I think, you know, when if we went back 10, 20 years, we would think about investment in terms of more traditional plant and equipment. Nowadays, kind of in the new economy, really research and development, I think, is kind of the new currency. And so that R&D spend that happens is really driving strong earnings growth, strong sales growth, strong dividend growth. And to give you maybe a little bit of an idea on that, I mean, our partners at NASDAQ have put together some figures which I think are helpful. If you go in the 12 months ending May, 43 companies in the NASDAQ 100 that are present in QQQ had at least one patent and collectively filed 32% of all patents in deep learning, to give you an example. Likewise, almost 45% of new patents in 3D graphics in the year ending May came from NASDAQ 100 companies. So these are the types of innovations that one is able to invest in when they invest in Invesco QQQ.
Yeah, interesting. Alex, I'd love to bring you in here. What are the sort of areas of innovation at Illumina that you're really excited about? How are you kind of spending that R&D money?
Yeah, no, it's an exciting time at Illumina. So maybe just a little bit of context. So at Illumina, our mission is to unlock the power of the genome. We create technologies that people use for genomic analysis, and they use them from everything from finding cancer patients the best therapies, to understanding the health of their children, to doing fundamental discoveries into the mechanisms of new disease. We're a platform business, so our sequencing technologies are used by many other innovators. So that's something we think a lot about. How do we enable their innovation? And then there's areas, and this is relatively newer to us, where we're creating kind of full end-to-end solutions. So a new area of innovation for us, which is beyond our core DNA sequencing, RNA sequencing technologies. How do we make it easy to take samples, to automate their preparation? And then on the analysis side, analysis of genomic information can be complex. So we thought a lot about what can we do there to make the data management easy for customers, for them to get automated results so that they can get the discoveries they want, they can help their patients find their diagnoses, and do that as easy as possible.
Interesting. So obviously the pandemic has dramatically changed business as usual in the world, right? I'm curious, Alex, what about the pandemic has changed the way you think about innovation and the way you innovate?
Yeah, it's had a dramatic impact on our business at Illumina, on our technology, and also how the world sees us. So infectious disease was an important but smaller part of our business historically. Obviously, with the pandemic and the interest in understanding the virus, it became much more significant. So we actually played a very pivotal role. Our sequencers actually provided the first sequence of the SARS-CoV-2 virus in January of 2020. That sequence was then downloaded by Moderna and BioNTech, and within a little under 2 months, they had the first vaccine candidates going to early clinical trials. Along with that, we developed a COVID sequencing assay that allowed not only the virus to be detected, but to understand the variant. So you hear so much about the Delta variant, other variants. The majority of that DNA, that analysis actually comes off our instruments. We developed that product in 2 months, much faster than anything we had ever developed before. So the pandemic opened up a whole new area of business for us, genomic surveillance, genomic epidemiology, tremendous interest in infectious disease, a lot of thought now beyond this pandemic. How do we set up global surveillance networks based on genomics so we can see the next pandemic coming earlier and gain those precious months? And it really complemented a whole new method of vaccine development. In addition, the urgency of that taught us, how fast you can do things, right? You can make a product in 2 months, if you really need to, and you're innovative about how you do that. So, there's no going back from that about the new areas for us and, the innovation cycles that we can go through.
Yeah. Nick, I'm curious if you have a response to that. Is there sort of a no going back moment for investors as well in terms of how they look about which areas they should be investing in, now since the pandemic, and how they should be looking at, which companies are really set up for that long-term kind of innovation that Alex just talked about?
Yeah, I think that one of the implications of the pandemic really was related to the R&D and innovation spend that had kind of taken place and what that meant for the performance of companies during the pandemic. I mean, you think about the work at home, play at home environment that we had after the economy shut down. And a lot of that, I think, stemmed from the success of it stemmed from the fact that these investments were made and technology was in place to really keep the economy moving. And I think what is also interesting, and we saw this, is that NASDAQ 100 companies, because of that R&D spend and the innovation that they had, actually outperformed during the COVID sell-off. And investors really demanded or desired some of the characteristics of companies that were innovative because it led to more versatility, more flexibility, and the ability to grow their earnings and profits in a very adverse environment. And so I think one of the takeaways from the pandemic is investors are paying a lot more attention to a company's ability to innovate, to spend in a way that develops business that is able to kind of create opportunities. And that, I think, is really caused a lot of investors to think about innovative companies as having, maybe we'll say, something like quality type of characteristics. There's some characteristics that spend has that is very attractive to investors because they're seen as more durable, able to weather different adverse economic conditions.
Yeah. Alex, I'm curious if you have a response to that. What are the sort of characteristics of an innovative company? What sort of structures do companies that are really keen on setting themselves up for innovation put in place to foster that kind of progress?
Yeah, great question. Following on what Nick was saying, we think very strategically about innovation, right? So as an example, the first human genome that was sequenced about 20 years ago cost several $100 million, right? And so through dedicated efforts in technology, miniaturization, chemistry, leveraging semiconductors, and so on, we brought it down to $600 today. And earlier this year, we talked about the ability to actually sequence a human genome for $100, right? And part of the way we got there was making very long-term investments. So we have technology roadmaps that go 5 years, 10 years. We're thinking about what's possible when you invent new things that may not even exist today. And we make investments in those. And through that, we create shareholder value. We also create leading differentiated products. And one interesting aspect of that is, we don't know what $100 genome sequencing technology is going to be used for. We actually know many of the uses, but we don't know all of them. So some of our long-term business is going to be new applications that will be enabled. Could it be a pandemic? Could it be a breakthrough in cancer research? We don't know, but we know that bringing down the cost of genome sequencing, being able to create higher quality data, faster analyzing it, is going to be useful for the biotechnology industry. And so we're positioning our company and our customers to succeed, whatever the future looks like.
And Nick, one of your colleagues recently kind of wrote about this idea, and you've touched on it a bit, about, investors who are the most successful are often the ones who are taking that sort of long-term view. How can they be sure? Is it just numbers, but is it just sort of R&D spend? How can they be sure that the money that they're investing in is in the companies that also have a similar long-term view of innovation, like the one Alex just talked about?
Yeah, that's a great question, and I think what we've seen is the result play out in the data, meaning that we've seen kind of a big R&D spend pick up over time. I mean, if you look at R&D spending in NASDAQ 100 companies, it's basically almost doubled over the last 5 years. There's more spending on R&D the last 2 years than there is on traditional capital expenditures. And I think companies and the management of companies, I mean, they are stewards. I mean, I think they're trying to they're trying to do the right thing. They're trying to maximize profit. And so when we look at the allocation or the spend, and then we see what that is meant for returns, it's lined up very, very well. Meaning we've seen the NASDAQ 100 show outperformance relative to other kind of traditional benchmarks where the R&D spend has not been as high. So we see the faster sales growth, we see the faster earnings growth, we see the faster dividend growth as a result of the fruit of this R&D spend. And I think even when you dig down into some of the company's reports and you do the research, I mean, you can see, let's say, drug pipelines and what's going on, or you can see patent filings that are taking place. And so if you do the homework, I think there's a lot of evidence that companies are doing a good job in terms of their allocation, and it is translating into positive investment experiences for the investor.
Yeah. Alex, what some of the barriers are to innovation? Why do sometimes companies struggle to prioritize it? Or what are the sorts of things in the overall marketplace that can lead to innovations either maybe not working out or them just not having enough resources to execute it?
Yeah, another great question. We think a lot about that. So one is that there's kind of a positive feedback cycle when you get it right. So when you make those long-term investments and you have those inventions and technologies and they lead to differentiated products and you have that business success, it gives you tremendous confidence in continuing to make that as a management team, right? And we have that at Illumina, over a couple decades now. I would think it's also appreciated by the investment community when they see a high R&D spend. We're about 18%. and they see that pipeline and that relentless commitment to differentiated products over time. So I think when you get it right, it gives you a lot of confidence in your model for doing that. You talked about barriers. We think a lot about disrupting ourselves, right? So not being comfortable. What's the next frontier? What are other areas we should get into? We don't want to be disrupted by someone else. We want to, disrupt ourselves, right? So I think you need that cultural mindset, so you don't just, rest on your market position if that's a good one.
And Nick, any thoughts about some of the barriers that companies are facing to innovation?
Well, I think that when we think about it, I think the environment to innovation is actually a lot easier now than maybe what it was 5 or 10 years ago, because I believe investors are very hungry for growth. I think people have want to be kind of like growth investors, and they are kind of forgiving in terms of that spend, because they believe that it can lead to something. And so I think that you've heard the kind of the growth value debate in the market, for example, and you'll see a lot of investors nowadays they're kind of cautious about that value, because it's seen more cyclical. It's not seen as secular, and so I think investors have really adopted kind of the growth orientation for investment. I think the barriers, specifically, it's kind of up to how far companies and technology can kind of push themselves. And it seems that as time has progressed and we see innovation data, we see everything that's happening, it seems that the door continues to kind of open up and create opportunities that we weren't thought was present 5 or 10 years ago. So I kind of think the runway is still very, very large, and I don't think there's going to be something that really inhibits kind of the innovation that we can see in the future.
Well, let's talk about the future and looking into the future. Alex, what are sort of the innovations on the horizon, either at Illumina or sort of out in the broader kind of business ecosystem? What are some, 10 years from now, what are some of the sort of hot spots of potential innovation that we might want to be looking forward to? And feel free to guess. There are no bets on the table here.
Sure. A few things there. One is on the data side, right? So we produce a huge amount of genomic data, our customers do. We've come to appreciate the value in that. So not just in terms of immediate insights or diagnoses, but when you have large amounts of data and you have good approaches to machine learning or deep learning, you can develop methods that can go far beyond anything we did in the past. So we've had some early successes with that, demonstrating more of the genome that can be valuable, deeper insights, and we think it's just the beginning. So we're investing a lot more in our data infrastructure, data engineering, much larger machine learning and data scientists, and we're really seeing the benefits to our products and our customers. In the pharmaceutical industry, there's been, over the last year, some exciting new drug targets that came about through very large genomics data sets like the UK Biobank, where when you have 500,000 samples and you have really good medical information, machine learning algorithms can find things like new targets for obesity or cardiovascular disease that you couldn't have found in smaller data sets. So we think that's an ongoing trend that's going to be really exciting over the next decade. Another, I would think it's important to mention, is company creation and early companies, right? So there's a lot of people who start companies using our technology in new applications, therapeutics, also diagnostics. We've created an accelerator, and in our company accelerator, we catalyze new company creation. We've also started to do that globally. That's another trend we're seeing is going to be very important to our and the industry's future, is new companies and new innovations, not just in the United States, but in Europe, in China. We just partnered with a prominent venture capital firm there, Sequoia, in China, and started a new genomics accelerator.